Hello everyone. This is Payal Bhagat and I'm your accountancy teacher. You are all in 11th standard and you've all chosen commerce, yes? So you have to deal with all the new subjects now, the one that you haven't come across till date, yeah? So far you have had 3 to 4 lectures of Standard 11th. Obviously, you know me well that I am teaching accountancy to you all from past few lectures, and because of lockdown, we are not able to meet face to face as the schools have been shut. Yeah. So we have chosen the path of video lectures for your convenience and to keep consistency in the field of education. Yeah. So let me introduce the subject once more. You already know about this very well. I have explained this in the very first lecture of this subject. So again, accountancy, the main subject I can say in commerce is the pioneer subject you can say, and in today's lecture we are going to continue with chapter 1 that we have been doing from past few lectures, and the chapter is accounting and its terminology. Yes? In the very first lecture, we have had an introduction about the chapter. I've explained what actually accounting is, what is its meaning, and what are its uses, advantages, characteristics, objectives, etc., etc. Yes? So firstly, let us quickly revise whatever we have done so far. So firstly, accountancy is basically keeping records. Yes? A record of what? Let us see. This is the main point of the subject. Keeping records. Records for what? For the transactions. So another question comes is, what is a transaction? Yes, we have already understood this, but still let us quickly revise. What is a transaction? Exchange of goods and services of business between two persons in terms of money. Terms of money is the main point here. Understand. First of all, the point that we have written here, keeping records. Record for what? For transactions. What is a transaction now? Understand. Let us consider a simple example for this. You are a owner of some shop. Say for example, you are having cosmetic shop. Perfect example to be considered. Yeah. You are having a cosmetic shop. So obviously you might be having ample of cosmetic products available with you. Yeah. And this is a type of business that you do. Yeah. So what is the main objective of doing a business? What it is? Obviously to earn profit. Yes? So making profit is the main objective of business. Yes? So how do you get to know that what is the amount of profit that you've earned, or how much is the amount of profit that you make during a year? Now the year, if we are talking about, there is a lot of difference between accounting year and the financial year. If I have highlighted this point in the previous lectures, I don't remember actually. So let us revise this point first before we begin with this explanation. Accounting year, of course, a year is of 12 months. So accounting year is not similar to the calendar year. It is completely different. It starts just the way your calendar year begins from January till December it is. The accounting year begins in the month of April, the 1st of April, and it ends on 31st March of next year. So the current accounting year can be 1/4, 31st 3, 2021. This is how accounting year is considered every year, assessment year, financial year, anything that you will say. Yes? So during this 12 months, anything that happens in your business, remember which business you are doing, just we have to suppose this for now. Yeah? That you are dealing with the business of cosmetics. Yes, you are having a cosmetic shop. So anything that you have sold so far, anything that you have purchased, any amount of the salary that you have given to the people working at your place, yes, the amount of profit that you have made, the number of transactions taking place every day, everything is to be recorded. Yes? So this is to be recorded for entire accounting year, and the purpose be that you will obtain the financial position of your business. Yes? That what is actually economic status of your business, what is the amount of profit that the business is making, yes, which is the main purpose of carrying out any sort of business activity. Yeah. So let us start from the beginning. So we are doing chapter 1, accounting and its terminology. The meaning is that actually in simple terms, it is to keep record for the transactions. Transaction, what is a transaction? It is exchange of goods and services of business between two persons in terms of money. Yes? So the example that we have been considering, you are having a cosmetic shop. Now a customer visits your shop and a person is asking for some cream. Yeah? Then the next person arrived and is asking for some rubber bands. The next person arrived and is asking for a few other cosmetic products, maybe earrings, some jewelry. Yeah? So this way, there are ample of customers that visit your shop every day. Yeah? So is this possible for you to memorize that how many people have visited my shop and who has purchased what? Is it possible for you to memorize? Of course not. If I'll ask you what did you eat yesterday or maybe day before yesterday for your lunch or dinner, it's not possible. You will take time to think. And also it is possible that you won't be able to answer because you just don't remember. Yes? So this is difficult to memorize every day, the same thing. So to overcome this problem, we record things so that whenever required, the necessary information is available. Yeah? So all the transactions taking place in the business are recorded in the books of accounts. Yes? We've had a detailed introduction in the very first lecture of this chapter that I have presented. I have given you people. and I hope you have gone through all those lectures, and I also expect that you read the topics in detail in your textbook, and also you are doing homework on a regular basis. Yes? So we'll continue with the same topic. So we are recording the transactions, the business transactions we are recording. Now what does a business transaction mean? Any transaction which involves the exchange of money against the goods, assets or services. Yes? So simple example, Payal purchased goods of rupees 5,000 from Rama. Okay? Understand. This is the transaction. I repeat, Payal purchased goods of rupees 5,000 from Rama for cash. This is a transaction. Who has purchased goods from whom? Payal has purchased goods from Rama for cash. So Payal has purchased goods, and in return Payal has given money. So this transaction can be measured in terms of money. So all the transactions which can be measured in terms of money can be recorded in the books of accounts. Yes, non-economic transactions are not to be recorded in the books of accounts. Yes, because business is purely a profit-making activity. Yep. So that is the case. So transactions, in detail if we want to go, the types of transactions is the topic we can understand. I hope you know what is an accounting year and the meaning of accountancy by now. You have also learned, understood several characteristics, advantages and objectives in the video lectures that have been given to you so far. Yeah? Okay. So the topic that we are dealing with today is terminology of accounting. Yep. I hope you all have your textbooks with you, just like I have. So, accounting and its terminology. This topic is given in your book in the very first chapter. The very first definition in that is business transaction. We've understood the meaning of transaction. Transaction is exchange of goods, services, assets in terms of money. Yes? So you have a perfect definition for the same in your book. It says, business transaction means exchange of product or service of business between two or more persons in the form of cash and or on credit. Understand this? They say in the form of cash or on credit. Now you know the meaning of transaction by now, but if we are talking about the transaction on cash or on credit, these are the new words. Yes, these are the new words to be understood. So firstly, transaction which can be measured in terms of money is only recorded in your business, books of accounts. This is the first condition that you will fulfill, that the transaction should be measured in terms of money. And the transaction which can be measured in terms of money is actually economic transaction. Yes? So the transaction which can be measured in terms of money becomes an economic transaction, and in business only economic transactions are to be recorded. Non-economic transactions, the one which cannot be measured in terms of money, cannot be recorded in books of accounts. Yes? So they say that business transaction is always economic transaction. I'm reading in the textbook. Economic transaction means a transaction which can be measured in terms of money. That is the point presented here. Okay, cash transaction made in the form of money clearly depicts economic value. Whenever there is cash transaction, the cash is received that moment itself. Yes? So this highlights the economic value of the transaction. Yes? And thus, this becomes a cash transaction. Yeah? Further, business transaction comes into existence through the medium of cash or in the form of credit. So here comes the point about types of transactions. This is the meaning of transaction, and now we are going to understand the types of business transactions, which are basically cash or on credit. I'll still repeat the meaning of transaction for once for your convenience. Transaction is an exchange of goods and services in terms of money. Okay? The example that we have been considering for so long is that you are having a cosmetic shop. A person arrived at your shop and says that the person wants so and so things. You will pack the same, you will give it to that person, and that person in return is going to give you the amount of bill. Say for example, the amount of bill is 10,000 rupees. Okay? So you have given all the things required by that person to that person itself. And in return, the person has given 10,000 rupees on the spot. So this is a cash transaction. Yes? You have given goods, the person has given money. This is exchange of goods against money. Yeah? So money is the main medium of exchange, we can say. Yeah? In earlier times, it was a barter system. I have explained this in the first lecture, of course. Barter system, what was the system? That you used to exchange a product against the product. Yeah? That means you are going to give a certain product to some person, and in return, that person is going to give you the product that he or she has. Yep. Say for example, a farmer is in need of milk or any other product, yeah? So the farmer is having a grain with him, and maybe he is in need of cloth, so he'll visit a cloth merchant and he'll be asking that person that I'll be giving you grain, and in return you are going to give me cloth. Yeah? So this is the exchange of product against product. You'll give some commodity, and in return you are going to get some commodity. Yeah, this is how people used to satisfy their needs in earlier times. Yeah, but it's not possible always. It is not necessary that if you need the cloth, then the other person needs milk at the same time, grain at the same time. It's not necessary. Yeah, yes. If I want to have milk from the other person, but the other person is not in the need of commodity that I am having. Yeah. So how to undertake a transaction in such a case? You just think. Yeah. So to avoid this limitation, Yeah, this limitation of barter system, there was an emergence for a common medium of exchange, which is money. Yes? So now if you want to buy a milk, you'll purchase the bag of milk, and in return you are going to give whatever it costs for. Anything that you want to purchase, you'll have to pay for the same. And anything that you will sell, you will get in return something for that. That is money. Yes? So nowadays, money is the main medium of exchange. Yeah? So yes, we were talking about transactions. This is an exchange of products and services in terms of money. Yeah? That is what a transaction is. So we were talking about cash transaction, and I have given you a simple example to understand the same. Now consider the same example, that a person visits your shop, yeah, and has purchased the necessary commodities required by him, yeah, and the bill arrived to 10,000 rupees, yeah. And the person says that I'll pay 5,000 rupees at the moment and the other 5,000 later, after 10 days, 5 days, or maybe a month or two. Yes? So this becomes a credit transaction. Yes? Credit transaction does not mean that there is no involvement of money. Just that the receipt or payment of money is postponed to some future date. Yeah? So instead of receiving an amount at the moment, the amount is delayed to be paid or to be received. Yeah? It's just that simple. Okay. So further, let us consider the example that is given in your textbook. Yeah? Okay. And it says, yes, please pay attention in your textbook. We have been dealing with the topic of terminology of accounting. And the very first thing that we are doing is the business transaction. And we have come across the definition of the same, business transaction. And we have also understood what is the meaning of cash transaction of business and credit transaction of business. So the very first thing is cash transaction of business. The example has been presented in your textbook. It says, goods of rupees 5,000 sold to Rajnikant for cash. I repeat the example, goods of rupees 5,000 sold to Rajnikant for cash. Let us consider this example for better understanding. Goods of rupees 5,000 sold to Rajnikant for cash. This transaction is a cash transaction. Yes? Now you may ask, ma'am, how? Let me explain. Goods of rupees 5,000 sold to Rajnikant for cash. It is clearly written here that the goods have been sold for cash. In this transaction, it is clearly highlighted that the cash has been received. So this is how you recognize a transaction, that this is the cash transaction. Now let us understand what happens. Goods of rupees 5,000 sold to Rajnikant. Who sold goods of rupees 5,000 to Rajnikant? Me. Or if you are considering this example from your point of view, then it's you. You have sold goods of rupees 5,000 to Rajnikant. If I am explaining this, I have sold goods of rupees 5,000 to Rajnikant for cash. This, you just have to suppose this so that you can understand it easily. Always consider that you are the owner of your business. The business is yours. Then the understanding of topic becomes clear. Yeah? So this is my business. And yes, what is goods? Firstly, goods is anything, any item in which a trader is trading. If you are having a bookshop, then books are goods for you. If you are having a cosmetic shop, then all the cosmetic products are goods for you. Yes? Then if you are dealing with bags, then bags are goods for you. Yeah? So goods are the items in which the trader is trading. So again, consider the thing that you are the owner, yeah, and you have sold goods of rupees 5,000 to Rajnikant. Yes? So goods of rupees 5,000 sold to Rajnikant for cash. What did you give? You gave goods. That means you sold goods. What did you receive? Cash. You've sold goods. Yes? See, understand the exchange at first. You gave goods, you have received cash. Exchange of goods in terms of money. This is a transaction. Further, amount is received the same point, at the same moment, and this is why it becomes cash transaction. Yes? So I have sold goods of rupees 5,000 to Rajnikant, and in return I have received goods worth rupees 5,000. Cash worth rupees 5,000. All right? Hope you are able to understand. Now, if you'll check your textbook, the elaboration of this transaction is given. Okay. Rajnikant is a separate person, obviously, is an individual. Goods is a product. Is what product in which I am dealing? Rupees 5,000 is economic value which was received on the spot. Goods worth rupees 5,000 you have sold, and 5,000 is received immediately at that moment itself. So this 5,000 as the economic value of this transaction. Yes? And lastly, they say that money is exchanged for goods. The amount is received, goods goes out. Goods are sold. Yes? So this is a transaction. Further, it is a cash transaction. Yes? Fine then. Let us see which is the next topic. It is credit transaction of business. We'll consider the same example. This is given in your textbook. Yes, credit transaction of business. Please pay attention in your textbook. I'm reading the question. The example which is given. Goods of rupees 5,000 sold on credit to Rajnikant with condition to pay the amount within 10 days. Goods of rupees 5,000 sold to Rajnikant with the condition